So thank you. So trend analysis is very important. It all begins with understanding the market. Above the market is you. So you have to understand yourself, who you are. If you don't know who you are, then you will not be able to make money trading in the market. So you have to understand who you are because everybody is different. I'm different. My sister is different. My friends are different. You are different. So everybody is different. They come from different background, different objectives, different risk appetite, and a different age, different availability. So there are so many things going on behind the scenes. So the same trade can be sent to 10 people, and 10 people will have a different result. So so you need to understand yourself. That's the one big topic, one big on the top. And then comes various topics, and then in the middle comes the market. So you have to understand the market. If you don't understand what the market is doing, uh, you have a very little chance of making money from the market. Market will take the money from you if you don't understand what the market is telling you. So this session is about the market. Now, it's not everything, it's just a little bit, but it's about the market, it's about the trends analysis, and then more. So let's begin. So here's a quote. I hope you understand what this quote is, what this is telling you. Come to the edge, it's too high. Come to the edge, and they came and he pushed and they flew. So I hope you understand this quote. So this bullet points right here is not everything. In this, there are more. So I ran out of space. So there's more to it. Understanding trend, characteristics trend, trend and reversal, volume confirmation, three major trends, three directions of trend, trend following systems, and key to successful trading, decision trader faces, and trends classification, and there are more topics. So this today's session will run about 90 minutes. So get ready, get some water, etc. So I'll start with the little background, so you understand what the so you can relate to the market, and then we will go into the trend analysis. So here's the chart of the economic cycles. We know economic cycles go through ups and downs. So here's the trough, and here's the peak. Then it comes the trough, and then another peak. So and the life goes on. Same as the life. So trough, peak, trough, peak, trough, peak. So same as the market, down, up, down, up, down, up. So we just play the market up and down, and we make money. So if the market is going up, we need to have a strategy which fits what the market is doing. When the market is going down, we need to have a strategy which the market is doing. So up and down, that's the one big game being played, and we are all players. So money game is a one big game. So we are just the players. The game is designed at the top by a few people to extract as much money from us as possible. So our effort is that they don't take our money. We just get our share. Here is another, so we can divide the market now. We are going a little one step deeper. So here is the 4 stages of market cycle. So stage 1, you can see the market bottom, stage 1, you can call it. And then the stage 2 begins where the market starts to trend. So you can divide this stage 2 into further sub stages, and then have your strategy what to do when the market is going through the stage 2, one big stage 2 climbing up, but there are sub steps in between. The market just doesn't go up straight, and then finally market reaches the top. So you have to understand if the top is occurring and what you will do, and then market just tanks, stage 4. So there are various stages. Market just doesn't tank most of the time. It just panic and fear and all that. Greed comes in and people buy on a dip. They think it's a dip, that they buy the dip, It's is not a dip. Market is going down further. So let's get the hell out of here. So it's all one big game. The market goes down, and then the market bottoms. Sometimes market bottoms below the low of the previous low, or sometimes it bottoms above the low of the previous low, and then it starts again, and then other players come in and they start participating. So then stage two begins. So this is the way the market behaves. So understanding the trend is absolute essential to the technical approach to market analysis. So we need to understand the trend. If you don't understand what the trend of the market is on a day-to-day basis, intraday basis, whether this is a correction, this is a pullback, this is a sell-off, whether the market is at support, whether the market is at resistance, market making a new high or new low, or lower low, lower high, or higher high, higher low. What is going on? So where the market can reverse. So all this, if you understand, then you make money in the market. And the trend, so we have to assume that even once the trend has started, it will continue to go move in its direction. We just cannot say, okay, the trend can stop. No, the trend can continue to go, keep going. A trend in motion tends to continue in motion until it's not. So the trend has started in early October, and it is still going on. So as we know, the trend has started and it's still going on. So if those who in the middle, they decided to short, they are losing money. So they are losing money if they went short in the market, or they executed the short strategy, so they get killed. So a trend in motion tends to continue in motion until it's not. So we have to know that, and we have to figure out a way where we can detect that the trend is changing. Most of the time, market tells you in advance that the trend is changing, because the market just doesn't fall; it goes in a sideways mode first. So I'll talk about more later. Volume also confirms the trend. So the volume is rising. When the market is rising, the volume is rising. That is also telling us that the more buyers are in. So the market is looking healthy. Now, there are three major trend phases. So there are three major trend phases: accumulation phase, public participation phase, and distribution phase. So public participation phase, this is where we as a retailer come in. We are in, most of us are in public area. Big boys are either in accumulation phase or in distribution phase. So what is in accumulation phase? The accumulation phase is when only the big boys, those who have knowledge, or the investors, the traders who are very sharp, they are the one who buy at the bottom, because no technical indicators in the world tell you that the market has bottomed. You can use any indicator, it will not tell you. The indicators are late. So, but these guys, they are smart. So they recognize the value in that market, whether it's a market itself, or it's a stock, or it's a future, whatever it is. The smart guys, they recognize that this is the bottom, and they accumulate at that price. And if it's a market, suppose it's a big market, or anything, any stock, Tesla, Apple, Baidu, if it's tanking based on the bad news, and it's just maybe Beyond Meat going to 75. So all the bad news, it doesn't matter, all the bad news comes, but it doesn't just go below that price. It just keeps bouncing up. So all the bad news, so the big boys, they know the value and they buy, so they support that price. Now the public come in when the market is rising up, and it's on CNBC, and people are chasing, and then they have no idea where to exit. They just jump in, they just buy it, because they listen on a CNBC. No proper entry point. So there is no. And sometimes it works. You just buy and hope that, okay, you're not the last person to be holding. the music doesn't end on you, on someone else. So you can put your head on someone else's head, and you just keep doing it. So the public participation phase, that's where you can time your entries in these kinds of stocks which are rising, or the market which is rising. So you time your entry, be patient, be confident, and you can make money. So in this phase, there are a lot of other they people participate. So retailers or other investors, they participate. So the market moves up further, and then we keep hearing a positive news. So that's what happened. And then comes the distribution phase, where media is bullish. So every day Tesla rising 20, 50 points, and it's going up, and everybody's raising their target. And now it's 600, now it's 3,000, now it's 5,000. So everybody is bullish. Economic news is better than ever, volume rising, people participating. So those who bought at the accumulation phase, at the bottom, rock bottom price, they are the one who start selling. So they have too much profit. So they sell. Retail investors sell later, because the news which will come, where the news will come 2 days later. The big boys already sold today. So the news will come 2-3 days later, because they are the one who have access to the news. So insider trading, etc., is always is there. So retail investors sell later. They panic, they fear, and they jump the ship. So this is another chart. So here is the market bottom, indecision. Then the greed comes in. So market starts. So here is some news, positive news comes after the consolidation or ping pong fashion. The market is moving. The high demand sets in because of the news, either delivery of the car beyond expectations, or some mergers, or some new product, whatever. So there is a news here, and the market breaks out. So the news was here, known to these people who were buying it. So it's indecision, but we call it indecision, that the sellers, some are selling and some are buying, some are selling, some are buying. So those who are buying, they are waiting patiently. They have deep pockets. They can absorb all the supply. So they absorb all the supply. They just wait for the news to come. They know the news is coming, so they can wait. But we cannot wait, because opportunity cost of the fund. We have limited fund. We cannot just wait for 3 months, 4 months, or 1 year for the news to come, but they can do that. So we need to participate in this. Retail traders, we need to participate in this phase when the market is moving up. So again, technical analysis needs to come into play, support and resistance, etc. So high demand comes, the greed sets in, and everybody is talking on the TV and news, etc. So we buy, and then more news come, and then everybody has done buying. So there's no more buyer left. So the market moves, but at less buying power. So market is moving up, but less buying power. Everybody bought here at indecision, and the beginners, those who bought at the breakout, maybe the market broke out, and then pull back again, another leg, pull back another leg, and then there are no more buyers left. So when there are no more buyers left, then the market just sitting at the top. Maybe it will break out to another leg up. Another news comes powerful, so the market can break out to the upside. But if the so that can happen. The market just sits there, pull back little bit, and then consolidate. And then, boy, the market is going further. So like these days, the market just keep going further. Okay, market again moving up. So if you have a trailing stop, you can just keep locking the lock your profit. Put a trailing stop. The trailing stop works. But then finally the top comes, and then there's nobody buying, or a little bit selling, buying, selling, buying. So all the smart traders, those who bought here, indecision, they are selling here without us knowing. They just sell it, and then when the news come, they are already out. So all of us who bought here and greedy and did not sell, we are the one who sell it. The fear, lock the profit. And then so when the market falls, it doesn't fall right away. It just gives you a hope. So we get hopeful when the pullback occur. We get hopeful that okay, this is it. This is the support right there. Buy some more. This is a market at discount. If we missed out on here, we want to get in here on a slight pullback. We don't see that the market moves so much from here all the way here. We just looking at the pullback a little bit because we didn't get in here, so we might as well get in here. So we buy or average down because we bought it here right there at the top. So now it's a pullback. We need to buy here to make it average. Sometimes it works, sometimes it will not work. But then another news comes and then tank. So those who bought it here, all these they are selling, and those who average down here, they are losing more. Those who bought at the top, they are definitely losing. So the panic sets in, and then a climax happen, and then everything is those who wanted to sell sold. And then these boys, they those who bought it here, they laugh, and then they come back and they pick up all this supply right here, and then the market goes on the sideway. No more, no more. It's not going down. It's not going up. It just sits there, and then a new cycle begins. So that's what happened to the market. Now the market has only three trends. So either the market is moving up, uptrend, market moving down, downtrend, I denoted in red, uptrend in green, and the market is moving sideways. So 70% of the time, market is moving in a sideways fashion. Only 30% of the time, market is either in uptrend or downtrend. So now, since it's a bull market, so out of 30, maybe 25% of the time market is in uptrend, and only 5% of the time market is in downtrend. But the 70% of the time, if you take a long, if you divide, then the market is in a sideways mode. So understanding whether the market is in uptrend, downtrend, or sideways is very crucial, because you can adopt the strategy which fits these type of market. If you don't know what the market is doing, uptrend, downtrend, or sideways, you will be it's like you are pulling out a wrong tool to fix something, or a wrong instead of baseball bat, you pull out a baseball bat to play badminton. So it is exactly like that. So the market is in uptrend, downtrend, or sideways. So we need to understand, we need to keep this in mind, that the market is 70% time market is in sideways motion. So here is the example of an uptrend. So how does the uptrend look like? So this is the way the uptrend, this market which is trending upward look like. So the markets, let's say market started here, it goes up, slight pullback, then makes another high, it goes here. So this pullback is your buying opportunity. So here you need to know if it's at the support. Is it at the support? Maybe it's a 50% retracement of the previous move. So if the market moved from here to here and it's 100 point and it pulled back 50 points, so this may be 50% retracement. This could be a big buying opportunity, because 50% early retracement. Then the market approaches higher. When it's coming to this peak, you may see the market hold, because it's a previous, this is where the market turns back before. So it will feel some resistance here. It will feel like market is not moving. It will spend some time here. So there will be some time where the market will stay there for a while. So the longer it stays at the previous peak, the more valid this peak becomes, because it's unable to cross. But so we need to be aware of that. Is it spending too much time at the previous turning point? So why? You can, one strategy is that you exit. Suppose you bought it here, you exit right here at the peak or just before the peak, and you wait what the market does. If the market tanks, then you don't have to worry. If the market starts to break out, then you have to get in again. So you clear this area and you get in, and you now your strategy, exit strategy comes in, where you will exit. So you figure out your target. Maybe the market is reaching previous some resistance on the left. So you look on the left, you see that, oh, this is the area where the market has turned before. So I set the target here, and then the market goes up, pullback goes up. So in other words, if I'm looking at this chart, the market is making higher high and higher low. So this is a clear uptrend definition when the market makes a higher high and higher low. So higher high, higher low, this is a clear definition on an uptrend. You shouldn't be adopting any shorting strategy. Rather, you're looking for the market strategy to go long. As soon as you spot the support, you believe in the support, you go long. You initiate the trade. If you trade options or futures or even stocks, if you want to buy 100 shares, you buy 10 shares. If you buy 10 contracts, you just buy one contract, two contracts, and see, test the water, see what the market. If you lose right away in one contract. That's it. You don't lose in your 10 contract. Later, when the market stops to go up, you can add more. So it proves to you, market has to prove to you that you're right. The market is proving that you're right. If it comes back, pull back suddenly, suppose, and you see, okay, it came and it tested the previous low and now it's rising, that's where you add another contract without hesitation, because you know, okay, the market tested my previous buy price and it's going up. That's where you can add another contract, whether it's or shares. Maybe it's at the same price or somewhere closer. So you don't, you have to believe in your technical analysis. So other words, trending market making higher high, higher lows, like these days, all the markets making higher high, higher lows. So it's telling us the market is in uptrend. Here is a chart of a market trending down. So in this market, we avoid going long. We need to adopt the strategy of down strategy, the market which the strategy which shorting the market, either buying puts if you're trading options, if you're selling, if you are trading futures, then you're selling, or if you are trading stock, then you're shorting that stock. And the reason is the market is making a lower high. So lower high and lower low, lower high, lower low. So the market moves down, it bounces up. So it's dead cat bounce, it bounces up a little bit. So some traders, they're very aggressive. They see the support and they go long, and their duration is long. Trading duration is long. If you go long on a downward move market, you have to be very quick in exiting, because you most of the time you don't get the opportunity to exit. So it's better to the correct way of trading this market is for this market to go to the resistance level. So let's say this peak, you already know this is the resistance level. You're smart, you know this is the resistance level. So as soon as the market goes to the resistance level, you short that market, whether you buy the puts or short the futures contract, or sell the futures contract, or short your shares. So stop. So you have to have you need to have a confidence. So when you short right here, the market will tell you that your entry is wrong. It will stop here and then it will move. So your stop is set somewhere here. But if you're right, then the market just tank. It will stop. It will stop here, right here somewhere. If you draw a horizontal line, it will stop somewhere here, because this is a previous low. So naturally, it will stop here. The traders who those who think that this is the right price to buy, they will come in and buy. But if the sellers are more than buyers, then market will eventually tank and it will make a new low. And then another game begins. Then it goes up, and you see this resistance area, and then you short it, and then you make, and it's going up. So market makes little go higher and then eventually tank. Let go higher a little bit, tank. But if you look at the chart, whether it's an hourly chart or a day chart or weekly chart, it's telling you the market is in a lower high, making lower high, lower low. So if you, so ideally, you should be only trading this market from the short point of view, and you have to be very patient. Wait patiently for the market to come right at the resistance level where the resistance is. Wait patiently whole day if you have to wait. If it comes tomorrow, okay, come tomorrow. I don't care. I wait and just wait. And when the market comes, then you short this market at that at that resistance level, and be confident when you're shorting it. Shorting is kind of scary for a lot of us. So when you're shorting it, you have to adopt that mindset that you're shorting. There's nothing wrong with it. Just you just need to be put on this strategy. So sometimes you're shorting in the same day. You're shorting this stock. You are going long in this stock. You are a day trader in this. You are a swing trader in this. You are a long-term trader in that. So different hats, different mindset, different account. You have to wear. I put on this hat whole day. So I'm a day trader, I'm a swing trader, I'm a position trader, so I'm all. So I have to change my hat, what I'm doing. So and I can short, I can go long. So you have to adopt. Now here's the chart of showing the uptrend and the downtrend. So this was the market was in downtrend from here 102 to 94, and then it bottomed. So you see the bottom occurred as a double. It did the test of the bottom. So when it bottomed right here below 94, it went up above 94, then it came back down to 94, and then it rose. The market since then is rising, and then it peaked here around 106 and came back to 101. So 101, when it came down to 101, we don't know that that this is the bottom of pullback or whatever. So but when the market bounced up, came back down, and so it starts to form a support. So support formed at 101, and then it starts to just do sideways motion, go up, down, up, down, up, down, and then it created another resistance at 104, then came back, tested 101 again, then rose, and then it broke, then came back and moved up. So this is the one major. If you look from here 94, and if you look here, right here, the corner, the market is in uptrend. But in this uptrend, the market went downtrend, sideways, all that. So market is in uptrend since March of 2009. So market is in uptrend since March of 2009, and in between the market did all this. So but if you remain long, you can remain long. If you went long here in March 2009, then you know what S&P was at that time and what is S&P right now. So you're making this much. But in between, the market did all this and then went up and then making a new high. So what kind of a strategy you adopted? So this is one long-term chart, like a 10-year chart, but you can go down as low as a 30-minute chart or an hourly chart and apply the same techniques. So it's the same. So what is your time horizon? What are you trying to accomplish? Now here's the chart of a sideways market. So the market is in a sideways motion. So in this, in the beginning, we don't know that the market is doing the sideways till few sessions gone by, and then we say, oh, this market is now in a sideways mode. It just doesn't go up or it doesn't go down. So this is what the sideways. The sooner we recognize that the market is in a sideways, the better it is for us. Because strategies starts to fail if we are long. If the market, let's say this market is here and the market is going down, and we adopt a shorting strategy, so it's working till it doesn't work, and then it stop here, so it starts to go up, and then we say, okay, it's just a retracement to the upside, and the market will eventually tank. It goes, makes a little lower high, and then it comes down. So we say, okay, now the market has started its new downtrend. No, it stopped right there at the previous low, and then it starts to go up. Then we say, okay, now this market is moving up. Maybe it's just a retracement. No, or the buyers are saying, okay, the market has started to move up, and now beginning of a new trend, because did the double bottom test, making a W. You see W. If you look at it, it's a W. So W, so it's rising, double bottom test. No, it stopped right here, and then we say, okay, it's making a head and shoulder. So this is the head, these are two shoulders, and once we know when the neckline is broken to the upside, the market is going up. No, the market is coming down again. Okay, the market is going down. Then again it stops here. So when it starts doing like this, it traps us. And when the market traps us, all our strategy fails. Unless you are very sharp, you recognize, you draw a horizontal line here and a horizontal line there, and you're very sharp, you recognize the bottom, and you recognize the top, you recognize the support, you recognize the resistance level, and that's where you make a lot of money also. But you have to be quick. So this strategy, if you look at this, suppose if you look at from the point of view of NASDAQ futures chart, so you can make a lot of money in this kind of situation. You go long, you go short, you go long, you go short, you can do all day and make money. Anything which quick move, you can make a lot of money. But if you are a long-term trader or position trader, you will not go anywhere. Whether you are going long or short, you're just stuck in this sideways trend. So recognizing this, that the market is in a sideways mode, is very important for us, because if once we understand there's a sideways market, we need to adopt the sideways. We need to change our thinking, our thought process. That the market is in sideways, I need to be quick. I cannot be greedy. First of all, I cannot be greedy. I need to take my profit quickly. Secondly, I need to time my entry properly, because if I don't time my entry properly, I will miss the move. If the support is right here and I just hesitate and I say, oh, maybe I need to wait. Maybe my 5-minute chart will give me entry signal, not the 3-minute. 5-minute, I'll wait for 5 minutes. No, not 5 minutes. I'll wait for 10-minute chart to give me entry. So 10-minute chart, the market is now here. Whereas the guy, 3-minute, he is confident, he said, no, I'm going long right here. So for 3-minute chart, give entry here, 5-minute chart, give entry here, 10-minute chart, give entry right here. And that's it. This is the move. And then market tanks. So so enter here, exit here. Not even exit here, exit way before, jump the ship before it moves. It goes here, because you're just trying to extract last pennies. So don't be greedy. Jump the train before the train reaches the platform. And then market comes down again, you have a faith that okay, the market bottom here, it will bottom here again. Then you, as soon as you see the opportunity, you get in here. Don't wait for the market to give you a lot of confirmation in the sideways market. Sometimes there's two techniques I teach is called up thrust and spring. So you can apply up thrust and spring techniques and have a higher confidence in the market making a bottom or top. So you can do that, but you need to be very quick in making money in the sideways market. So you can adopt the sideways market option strategies too. So what the sideways market is? Sideways market is trading range. 70% of the time, so the market is trade 70% of the time in the sideways market. We need to be able to recognize it as soon as possible, so we don't waste time. If we are at the break even, we exit at break even. If once the market is start, because there is opportunity cost for your money. We all have a limited fund, so the quicker you turn your money around, faster, whether even though if it's a little less profit, but compounding effect is taking place, and at the end of the year you have a bigger percentage gain. So if you buy and hold, you may make 50%, which is not bad, or 20%. And if you have a trust in your skills, you're getting in, getting out, getting in, getting out. By the end of the year, you may have 100%, 200, even 1,000%, or you just wipe out your account. So it depends what you're doing. So maybe if that's the case, then buy and hold is better for you. So what is sideways markets? It trades in the range. 70% of the time market moves in a sideways. Period of equilibrium in the price level. So there is a price level equilibrium. So here's the equilibrium. The buyers buy here, sellers sell here, buy here. So the market has set the equilibrium. So bottom is here, top is here. You just keep playing till the market breaks out either way. Either goes, it will tell you if once it break out, all the stops will be hit, and people, those who try to short, they all will lose money, and then they will switch their position to a long position. So you don't mind switching your position from short to long. In like Robert De Niro said in the movie Heat, that you should be able to leave the town in 30 seconds when you spot the heat. Uh, he told Val Kilmer. So when you spot the heat, you exit, and you should be able to switch your position. If you were short, when the market reach here and it market breakout, you cover and go long, double long. If you were short 10 contracts, you buy 20 contract, or at least 12. 10 to cover and 2 to go long, and then you can add more, because you don't want to get killed again on a fake out. So forces and supply and demand in relative balance. So there is a supply and there is a demand. It's all about supply and demand. So the support and resistance is supply and demand. So support is where the demand is demand. Resistance is where the supply is. So support and resistance are the two words for demand and supply. So demand and supply. So here is the demand at this lower price, and here is the supply. So we see all day. If you trade, if you're a day trader, you will see this every day. Where is the demand and where is the supply? So where the supply is, you should have your own contract or your shares to be sold, even 2-3 points below where the supply is, and you buy right there where the support is, where the demand is. You just are within that range, so you just get in and get out. Now, trend following system. So so there is a sideways there is a strategy for sideways market, but then there is a strategy for trend following, which is for this market, whether for uptrend and downtrend. So you need to have at least 3 strategies or 3 systems. What the question? Let me read the question. Well, between simple moving average, what's the difference between simple moving average and exponential? I never talk about simple and exponential. Please Google. Doesn't entering and exiting quickly cost you more money because of getting in and out than you end up making? It depends. Brokers, fees. So it all depends. If your broker is charging you $50 to buy and $50 to left, I didn't answer simple moving average, exponential average. That person left. Yeah, I'm not talking about simple moving average. So it depends. In and out, you make a lot of money. It depends on the market. It depends on the. That's why if you're day trading or doing something, you need to know your broker, how much broker is charging. Find the broker which is charges you less. So brokerage, this one right now these days, broker is fees are negligible. A lot of brokers, they're not charging you any commission, so they're making money from other ways. So commission doesn't play a role now in and out. So so don't worry about it. Change your broker. So uptrend, downtrend. So we need to have a solid strategy for uptrending market and solid strategy for downtrend market, and one strategy for sideways market. So if you don't have 3 strategies at least, I have a strategy for uptrend market. I have 2-3 for a breakout, for a pullback, for a deep pullback. Same for downtrend and for sideways. So, but we need to know what kind of market it is. So then pull out that strategy. So I cannot adopt a downtrend strategy in uptrending market or in a sideways. So first step is this. So I'll talk more about this later, more and more. So uptrend and downtrend. Okay, so trend following system. Traders need trend following system. So you need, if you believe in trend, first of all, it's your belief, it's my belief. So a lot of people don't believe in trend. So they think the market doesn't trend. So if that's your belief, remember the big you on the top. So that's you. So if you believe that the market doesn't trend, so then all what I'm talking right now is not making sense to you. But if you believe that the market do trend, then it may be making sense. So my belief and your belief needs to match. When match, then you understand better, you absorb better, so you can relate. So traders need trend following system. So you need a trend following system. So you need to know, okay, trend market is trending like Apple trending right now. Okay, my Apple is going to the moon. So any pullback, I'll buy. So Tesla going up, okay, is following the trend. So any pullback in Tesla, okay, I'm going to buy. So that's a trend following system. Trend following system will work poorly in trendless market, the sideway market. The trend following system will work poorly because it will not work. If you think the market is trending and you go long in the trending market, you need to hold for a while, because if the market is not, you enter here in the trending market. If your entry is late, it's still good. You can still make money because it's trending. So it doesn't matter if you bought Apple at 225 or 230, you were late, or you bought at 235, you're still making money. But if a stock which is going up and down, you lose because the market is not trending. So you lose and you get chopped. So trending, don't apply trend following strategy on a trendless market. You face frustration, you will lose capital, and you will see the drawdown. So you will face the drawdown. You will lose capital, you will lose frustration, you will have frustration. Yeah, you don't lose frustration. Frustration comes to you, and it doesn't work. So, so we all say, oh, why we stop making money? Because the market is not what, either that market which you're trading, that stock, or the overall market is just sideways. So it happens. It will happen again in 2020 sometime. So be ready. 3 keys to successful trading. So, so we have to remember these 3 points. We do not apply uptrend techniques in downtrend and sideway market. So the first step is that we should know what is first we need to know what kind of market it is, and then if it's an if the market is in downtrend or in a sideway mode, then don't apply uptrend techniques, which means that, okay, on a pullback you are buying, on a retracement you're buying, then you will have a drawdown or you will lose right away. It will not work. You do not apply downtrend techniques in uptrend and sideway market. So don't go short. Don't buy puts on the market which is moving up. Don't buy puts on a sideway market. It won't make money. It's just waste of time and time decay, and then your option will expire worthless. Do not apply sideway technique in trending market. So don't apply sideway techniques that you're selling calls against your hold. You will be called out. You have to surrender your stock. So don't do that. So first you recognize what kind of market it is, then you apply the strategy. So now when we are trading, every day when we are trading, we are facing a decision, right? So we face decision whether to buy the market, so which means go long, whether we are going long, whether we are selling the market, going short, or whether we are applying sideway technique. And there's a fourth strategy, which is just stand there and do nothing. Take day off. So like this long weekend, okay, nothing. Don't do anything. Or when the market is not clear to you, market is suppose your strategy is you buy on a pullback, and the market has just keep going up and up and up, and there's no pullback coming. So you can just jump in and hope that you're not the last person to be holding, and you will catch some move 25-30 points in Nasdaq future. Or you just say, no, I'm just going to stand there, do nothing. I'll just sit there and I'll wait as long as I have to wait for the market to come to me, my price, the price I'm willing to pay. So if that's the case, it's okay. You just be patient. Patience has its own virtue. So these are the decisions every day you have to evaluate what we need to do. So in my futures trading, I go through this right now. I'm going by the market, going long, or just standing there doing nothing. So I'm doing nothing right now. I didn't do anything yesterday. I may not do anything tomorrow also. So that is also a good strategy, because I don't want to just catch something and then I see immediate drawdown. So every day we're facing these decisions, and we have to decide. Now, the trend classification. So I talked to you about the trend classification, and then I'll tell you how I represent everything in a very simple graphical format for myself. I developed a software, and I do everything. It's done for me. It takes some time, but it's done in a very nice way, all for me to know what the market is doing. So anytime I know what the market is doing, so I'm at peace. I am not under stress or tension, nothing. I know what the market is doing, and if I get stopped out, it's fine. So, but knowing this is also important. So, three trend classification. So, there are three trends. One is called major trend, and the other name is called primary. Then there is an intermediate trend, it's called secondary. And then there is a minor trend. So, what is major trend? Major trend is the big trend, more than a year. Then below, underneath the major trend is the intermediate trend. So think of it, major trend on the top, then intermediate trend is below the major trend, and then below the intermediate trend is the minor trend. So in major trend on the top, then intermediate trend, and then minor trend. Below the minor trend, there are numbers of infinite numbers of trend. So major trend, you can apply major trend on a yearly chart. Intermediate trend you can apply on a 6-minute chart, 6-month chart, or 3-month chart. Minor trend you can apply on a weekly chart, not on a weekly chart, 5-day chart. And then infinite number of trends, which are hourly trend or 30-minute trend. So there's a trend, and then within the trend is another trend. So the market can be same market. If you ask someone, person A, if you ask person A, so what is the condition of the market? So he will say the market is going up for forever. Another person may say no, the market is going down. For that person, the same market is going down, and the other person may say the market is in a sideway or is going up. So three different people, same market, they are giving you different verdict on the market. So you have to ask them, what is your time horizon? What are you looking at? What period? Then once you find out the period, then you will say, okay, now I know that he's talking about the 15-minute chart. Yes, on 15-minute chart, market is going down. So you are right, market is going down. So we understand major trend, intermediate trend, minor trend. So now the major trend, this is in the textbook. So I'm talking from the textbook point of view, then I'll talk to you about my point of view. So, which I made it very simple for me. So depending who I am. So major trend is in effect for longer than a year. So we all know the market is booming for a long time, is bull, super bullish market. So major trend, if somebody asks me what is the major trend of Dow Jones, I'll say is bullish, very bullish. So okay, very bullish, and it's longer. Why it's very bullish? It's going up for more than a year. If intermediate trend, what is intermediate trend? In effect for less than a year. So within a year, there is a correction going on within the major trend. So there's a correction going on. The market is pulling back like 5%, 10%. So this is the intermediate trend. So intermediate trend, there is a correction going on. Now the minor trend in effect for less than a month. So within the minor trend is the shortest among the three, and it could be just a pullback in intermediate trend. So there is a major trend, there is an intermediate trend, and then there is a minor trend. So minor trend could be telling us something else, intermediate trend telling us something, and a major trend telling us something. So now it depends what kind of trader are we. If the major trend is upward for a long time, for 10 years, but the intermediate trend, which is this secondary trend, is going down, then market may be for the swing trader or for the position trader, we need to adopt the strategy towards going down, shorting the market, because this market is enough, trend is enough for us to trade or even to buy shares. So we need to it depends who we are. If we are a buy and hold kind of person, then if the major trend is up, we don't care about the correction. We just keep holding it, hoping that it will cost average down, etc. So again, it depends who we are and what we are looking. So here is the example of 3 degrees of trend. So from point 1 to 2 is market is in a major uptrend. If you look at, if we are looking at this from 1 to 2, market is in uptrend, but and then market is in uptrend from point 3 to 4. So market is in uptrend from 1 to 2, and market is in uptrend from 3 to 4. But the market is in a minor uptrend from A to B. From 2 to A, market was in correction mode. But from A to B, this is a minor trend. Market is in upward mode. You see, these are not the daily chart. These are not the weekly chart or monthly chart. There is no time frame on this chart. So these are just examples without the time frame. So there's no time period here. These are just the concept I'm trying to explain. So there's no period, no daily, etc. So this 1 to 2 is a major uptrend. 3 to 4 is a major uptrend. Within the uptrend, 2 to A, or 2 to 3 actually, 2 to A and then 2 to 3 is a downtrend. Intermediate trend is down, but A to B is a minor trend, which is an uptrend. So within the long-term trend, the market is going through the downtrend, intermediate trend, downtrend, minor trend, little bit up, minor trend down. So the market is doing this. So it depends what kind of trader are you. So if you are buy and hold, maybe you bought it here at 0.1 and hold it all the way here. You don't care, you care less what happened in between. You're just riding till the bull market ends. But if you are into position holder and all that, swing trader, then you are catching the move. So most of the time, a lot of time, unless you are sharp, in your entries and exit, and you make more money, catch more points, the guy who held from 1 here to 4 making the most. So the guy from here to here may be making the most. From most of the guys are not making money, cannot compete with this guy from 1 to 4, because he just bought here and holding all the way. Whereas all this here in between, unless you're very sharp in your entries and exit, you have a wrong entry, wrong exit, and all that. And 5 years gone by, and you're still there where you started, where the guy who bought it here, like a Warren Buffett, he bought here at 1 and he's still holding at 4. So he's sitting right here where all of us are doing this, unless we are very sharp. So here's another example of a trend. So this is market is in uptrend for a long time, but in between market is in a short-term downtrend, intermediate term downtrend, and the sideways, but the market major trend is to the upside. So now you need to ask some questions to yourself. Do I believe in trends? So do you really believe in trend? You can write down your answer, yes, no. Does trend trading fit my trading style? Does it fit? So for me, do I believe in trend? Yes, I believe in trend. Does trend trading fit my trading style? Yes, it fits my trading style. Number 3, what strategy I need to adopt to enter in the direction of the trend? So you need to come up with your strategy. That if you are going long, if you know this market is going long, then what strategy do you have? Do you have your strategy written down, what you will do when the market pulls back, then what you will do, or the market is going up, what you will do, or what you will do? So what is the strategy? And then once you enter in the trend, then how you will manage the trade. So if you don't know how to manage the trade, then you will not make most money. Number 4, what would be my initial stop in case the trend changes? So when trend change, suppose you thought, okay, this market is trending, now it's at the support, I buy at this support, so everything is good, it goes up, you make money. But what if it doesn't go up? So where is your stop? How far is your stop? What is your pain you can tolerate? Some people can tolerate a bigger pain, some can tolerate a little pain. So it depends. What would be my profit taking strategy? So are you going to put a trailing stop to take the profit? If you have multiple contract, are you going to spread your contract at different prices? One you selling at 100, another one at 101, another one 102, 103, 104. Have you spread it out like that so you don't get caught? Or you selling everything at 110? That I will sell everything at 110. I will not sell at 109. So what would be my profit taking strategy? So you have to come up with that. Number 6, what would be my risk management strategy? So risk management is a big topic. So are you how many contracts you can buy, or how many shares can you buy? You buy 1,000 shares, can you afford 1,000 shares? Maybe you can afford, if you have $1 million, you can afford. If I have a $10,000 account, I cannot afford 1,000 shares for that stock. Maybe a penny, 5 cents, $10, $5 share, but I cannot afford 1,000 shares of most of the stocks. I don't trade low price stocks. So, and then how I will manage my trade. Number 7, how will I get back in if the trend resumes and I'm out? So this is another question. So suppose you got in when the initially you spotted the trend, you got in at support, and now it went down and hit your stop, and you are out. Now you are out, you lost money, but then the trade goes in your in the same direction where what you anticipated. So if you anticipated the trend was this market is going up, you bought, but it faked you out and you got stopped out, and it starts to move up. Will you sit on the sideline and just because take emotionally, crying and saying, okay, I'm stopped out, I lost money, I'm not gonna get in this trade again ever? So it's your fault. So you have to come up with the strategy. If you get stopped out, what is your strategy to get back in? So what do you want to see that tells you or convince you that initially you were right, the stopping out was wrong, and now you need to get back in? Not only you will cover your loss, but you will make more money. But if you don't get back in, if you don't have any strategy, then that loss is there, the one you suffered 5 minutes ago. So now, so this is a trend analysis. Now, how we break down, we means Trade Genie, how Trade Genie breaks down the trend. So we have, we classify the trend into, for our purposes, because we are a day trader, swing trader, position trader. So for us, we classify the trend into 2 parts, minor trend and major trend. That's it. Minor trend, major trend, and we trade in the direction of major trend. So I'll explain how we do it. Minor trend and major trend. So what we do, minor trend, as we know, within the major trend. So we classify minor trend as a trend where market is going, suppose the market is going down, and based on our analysis, the market pulls back anywhere from 3 to 10 days. So a pullback is occurring within the major trend. So the pullback occurs from 3 to 7 days, 9 days, 10 days, something like that. So it's a minor trend. So we can say if the market is going down, we identify the market going down is minor trend is to the downside. Whereas the major trend is where the market is up, going up for 21 days and more, maybe 100 days. So we classify market in a minor trend and major trend. Now, so our software does the algorithm and detects the trend change. So we detected early October, we detected the market is bottom and starts to move up, and our confirmation for the market to go long came, the confirm up came on October 17, 2019. So October 17, 2019, for this, I'm not talking about the long trend market since March. I'm not talking about that. We're talking about from the swing trading and position trading point of view. Since then, the market is up 11%. So S&P, we track S&P for this, our purpose, is up 11%. So October 17, since then, we are adopting only long strategies, no shorting, nothing. I'm not focusing only on shorting any stocks or anything, only long since October 17, 2019, and S&P is up 11%. Now, so we do that minor trend and uptrend, we classify. And not only that, then we evaluate the strength of the market, because the strength of the market gives us the idea on what we need to do and when. Yeah. So it's like going on a highway. Sometimes I go on a highway 70 miles posted limit. Sometimes I can go 75, 80, and sometimes even posted limit is 70, but I'm going 50 or 40 or 30. So it depends how the road condition is. So this is this thing, market strength is the condition of the market. So we classify market into 7 categories and put it in a graphical format. I'll show you later. So we classify the market strength as a very strong, strong, mildly strong. So this 3 are on the strong side. Then the middle is neutral. So neutral, and then below is mildly weak, weak, very weak. So we classify the market into 7 categories on a daily basis. So end of the day, even intraday, I look at it, our software runs and classify the market into very strong, strong, mildly strong, neutral, mildly weak, weak, very weak. And then at the end of the day, we get the 100% confirmation, and we tell our subscriber what the condition of the market is. So we do it very simple way and present it to our members. So here's the example. So one thing, you can make it simple, and another thing, you can make it very complex. So I took this chart. This is a chart somebody posted of S&P on 25th November 2011. So this is one way of representing his belief. So I don't know who this person is, but he has MACD, he has full stock sticks, he has RSI on top, he has moving averages, he has Bollinger Band. So he is explaining the market. So this is one way of explanation of the market. He has volume charts, you see here, and he has a line here that the market is volume is low. He's pointing the circle here. The market is full of stochastics, is on overbought. Our MACD is below 0 line, so it's kind of maybe bearish. Circle here, head and shoulder pattern, moving averages. Some traders have 10 moving averages, 15. You know, there are 365 days in a year, so you can have 365 moving averages. A simple moving average or an exponential moving average. So you throw simple and move exponential, so you have like 800 moving averages. So you can do this kind of analysis if it works. Yes, it can work. It works, but you need to be master of it. So you know what you're doing. I do that too, but I made it more simple. So this is a complex representation of the market at any time, what the market is doing. So if you like, you can do this, or you can represent the market in a very simple way. So I do it in a very simple way. What we do, simple representation of the market. We present the market in a graphical form. Graphical representation, you see it, you know it, what the market is doing. You spot the trend. So you see the market in a graphic format, colorful. You can see market is moving up, moving down. All you need to know is whether the market is an uptrend or downtrend. Tell me this, tell me the strength. So, and then you take the, do the rest. So you spot the trend, you follow the trend. Actually, this is all about the market. You see the market in a graphical form, you spot the trend, you follow the trend. Under follow the trend is your strategies. Execute a strategy fitting the trend, right? If the market is moving up, you pull out that strategy which fits the trend and you execute. Rinse and repeat, rinse and repeat, rinse and repeat till the market, you spot the trend again. Okay, the market is in a downward mode, so I need to follow the downward mode trend, and I will execute the strategy which fits the downward mode. So you will do that, rinse and repeat, and then you detect the trend change. So you detect the trend change, you go on the sideline. Once the trend is established, then you follow the trend, spot it. So detect the trend, goes back to the spot the trend, follow the trend, execute the strategy. So this is the way I trade, and I provide this in a graphical format. So what we do not do to the members. So we don't torture them by sending them 40-page report of the market. We don't say you figure it out what we are saying in this 40-page report. So it's not like, okay, at the end of the day, I send you a 40-page report and then you read that PDF and then you figure it out what I'm saying and show you a bunch of moving averages and make your life miserable. And then I talk about MACD, RSI, stochastics, and justify my reason, my thinking of what the market. I'm not doing that. And I give you a bunch of if then else scenarios. So if the market will do this, then it will do this. If market does this, then it will do that. And I put many, if you really read the paragraph, there are a bunch of if then else scenarios there. This is a programming where you put if then else. So you put a lot of if then else there. So what happened? When I put if then else in this 40-page report, tomorrow, whatever the market will do, I will come out as a winner. Head I win, tail I win, and I will say, I told you so, nonsense. So I don't do this. Our software doesn't give you this. It's clear. What we do, we identify the minor trend, major trend, market strength, market's volatility. We tell you, now this is also very important to understand what the market volatility is. So people forget this. Market has four kinds of volatility, which I will explain to you. Quiet, market is very quiet like these days right now, or market is normal. So normal and quiet, they are same. And then the market can be volatile, and market can be very volatile. So market is volatile, very volatile, market is normal and quiet. So you don't want to, you need to stay away from the volatile, very volatile market. If you don't know what you're doing, you have to be very sharp in, you can make a lot of money in volatile market and you can lose your shirt. So ideally you need to trade in a normal and quiet market. So we provide you this volatility also. We provide market support, market resistance, and market target. So everything you need to know is in a graphical format in one little email which you receive on your iPhone, and you can open it and see everything and have a peace of mind. So what we do, major uptrend confirmation came on October 17, 2019. Since then we are long. We spotted the trend. I think the trend changed on October 15, but confirmation came 17. Since then, market has moved 11%. Up days 43, down days 21. Our strength, market strength, we classifying right now very strong, and volatility at the quite level. And this is the way we give you a market strength. We call it market strength barometer. So here is there are other information. This is another one information we provide you in a nice graphical format. So right now the needle is on a very strong side, so very strong. This green is a strong, this is mildly strong, and this is a neutral zone. So and this is a weak, mildly weak, and then mildly weak, weak, and very weak. So the market these days are moving in this 3 green area. Right now it has for a week now, more than that, it is in a very strong area, and then it can go in for one a day or so. It goes into strong mode, and then it comes back. Or if the pullback occurs, then it goes on a mildly strong area. And worst come worst is this is a neutral. So this is where our warning comes. When the needle goes on the yellow side, that's where the warning comes that now we need to be be careful. If the needle is moving from the green to the yellow, we need to be careful on opening new position, and with regards to the profit we have, or even if we are trading, suppose we trade Nasdaq future. So if I'm trading Nasdaq, and then if the market needle is in yellow, I will be very careful in opening a new long position, because the needle can go on this side, and if it starts going on this side, then it can go all the way to the red, very weak. So this is a warning zone. So this is the way we classify our market from the strength point of view. So this is a very strong. This is the strong. This is mildly strong. This is neutral. This is mildly weak. This is a weak, and this is very weak. So we have in the past we have this situation where the market was very weak, or weak, mildly weak, neutral. So this is the way the market changes. It's the strength. It just doesn't go. It cannot go. Just a second. It cannot go from very weak to suddenly. Just a second. Where did it go? It cannot just go right here, very strong, from very weak to very strong. It doesn't happen like that. It cannot. It's overnight. So, but we detect. So we detect when market moves from this area to this, we say, okay, the market is now here. So it's and we can see what's going on. So the market was, let's say the market is in this area, mildly weak area, from very weak, and our minor trend tells us that uptrend has established. Minor trend is saying uptrend has established. So we don't go short. We look for we wait for a few days to generate to go towards the long side. And what we do is we wait for a few days, we get the confirmation on the major trend, confirm up, which we got on October 17th, and then we wait for the market to come in neutral and ideally here. Once the market starts in the green, then all road is clear, and then we go full speed. And when the market go on a strong or very strong, then we just accelerate. So this is, if we know this, even if we are wrong in our entry, we know that, okay, market is on our side. We were wrong on our entry side, but we will come out ahead and we can increase our exposure. If I am putting $1,000 on a trade in a neutral zone, $1,000 here, I'll put 1,200 when the market is here, and then maybe when the market goes here, I'll start putting $1,500 per trade, because I know, okay, market, I need to take advantage. And if it goes here, I may start putting 1,700. So the traders, those traders who don't make money, they have the same strategy. $1,000. Would you ever suggest puts on a green market? Yeah, I suggest puts on a green market all day long to my naked put service. So we have a naked put service where I tell them to sell the puts. So if you are selling, if you are into selling puts, then contact me for collecting the premium. I tell the members to sell the puts and collect. Like I have a member, John. So John makes money 5,000, 10,000 on selling Apple puts all day long. Every time he sells puts, he collects $5,000 on the puts. So I tell him, and there's another member, Jeff. I tell him. So they collect money. So if you are into put selling, you can sell the puts, collect the money. If the stock goes down, you don't mind taking that stock. So on puts, on a bullish stock, not right now, we are not buying puts, we are selling puts. So you understand the market's strength. This is so important, and traders don't understand this, and we provide for less than $1 a day service. Next, I'll show you now where we go. Market volatility. So this is another thing which is so important for your success in trading. Market volatility is 4 categories. So we categorize market volatility into 4 categories: quiet, normal, volatile, very volatile. So if you do the study, historical study, the bull market are either in quiet mode or a normal mode. So that's where the bull market resides. The bear market resides in volatile or very volatile market. So bear market or normal. So bear markets are not quiet market. If bear markets are quiet, it's okay. You can it's fine. But when the market is bear, it tends to be volatile and very volatile. So what happened when it's volatile? The market is volatile. You short, and then next day the market rise 10 points, and then suppose Apple, you short, and then next day Apple is green 10 points, so you lose. Because what you're doing is you are shorting Apple in a bear market, and not knowing the market is volatile. Overall market is very volatile or very volatile. So if you miss this part, you're losing your shirt. I'm sure those who have been trading for more than a year or so, they have seen all that, and then how easy it is to lose the capital. So we detect volatility on a daily basis, intraday basis, we detect. And market is in a quiet and normal mode for a long time, since October. So bull market with the strength, and market have a volatility, quiet or normal, is sure shot of making a lot of money. When the market goes into bear, it needs to stay in quiet mode or normal mode. If it's in volatile, you really need to be quick. So a lot of time you have to be quick in taking profit. That's why, because the market is volatile. So we represent market volatility in this graphical format. So this blue is quiet, green is a normal, light red is volatile, and big red is very volatile. So every day we know where the market volatility is, we know where the market strength is, we know what's the market, is it uptrend or downtrend. So what else you need to know about the market? You know the trend, you know the strength, you know the volatility, you know the support, you know the resistance area, you know the target. If there is anything else left, let me know. So our service is $27 per month for this. Daily report to your inbox, peace of mind. You receive one report every day in the morning before market open. You get your report in your inbox. You do what you do best. We do what we do best, and we know about the market. It's only $27. All right. So why you need the service? Again, I tell you why you need the service. I am doing the favor to all the traders who I'm providing this my own report to all the others. I don't have to. It's only $27. I don't make much money, but I'm doing a favor. So know the trend change way in advance. You need to know the trend change in advance. So don't be too late. Don't expect to make money when you don't know what the market is doing and you cannot figure it out for last 2 weeks. Get in the trend at the beginning of a trend. So it's so important. Stay in the trend till trend change is detected. Stay in the trend till trend change. So if you're long, you stay long till the change is detected and conveyed to you. So you stay long or short, whatever it is. Execute trading strategies based on the trend. So the 80% of your success is, like Woody Allen said, 80% of success isn't showing up. 80% of 80-20 rule. So 80% of your success in trading anything is knowing what the market is doing. If you don't know what the market is doing, you may come out, you may make money, then you lose money. You make money, you lose money. So that's what happened. The profit is not consistent because you don't know the trend. You can increase or decrease your market exposure based on the trend. So if you know the market trend, strength, support, resistance, target, all this, if you know everything yourself, very good. Otherwise, contact us. Know where the support and resistance level are. Know where the market is headed. You need to know when the market is in uncharted territory. It's hard for us to know where the market is going. Like right now, the markets are in uncharted territory. So you can throw the numbers on the wall and hope it sticks. You can say S&P going to 3,300, Dow Jones going to 32,000, and Nasdaq to 9,400. Or you can be very precise in knowing where the market is going, and you know where the market is going, and you are confident in that number. So it's hard to figure it out where the market is going when the market is in uncharted territory. So not only the market, but the stocks. So for instance, Apple is in uncharted territory. So nobody knows where the Apple will go or Tesla will go, but there are certain ways you can figure it out. So that's what market is about. Market. If you are interested, go to my website, mytradegenie.com, and you can sign up there under market trend. It's just $27, and you will start as soon as you sign up. You will get the report, and then you will receive the report tomorrow. On a side note, before we end this, I have a new value-added service which I just added last week, and the reason I have a long story to share with you. Maybe I'll share with you sometime in April. I have a long story. Some of my friends know what story I have. So based on my story, it so happened that I found this service. So I got lucky and met some people, and I joined, and I added the same service for you. So if you're interested, this is a new service. If you're in, now look at this. In stock trading, only the smart trader, the street smart people make money. If I meet a lot of dumb people every day, and how I meet dumb people, they send me email. So or very intelligent people. So they have never gone to school, but they are very intelligent. And there are people who have gone to school, they are MBA, PhDs and all that, and they are all dumb. So it depends. So you can figure it out who is dumb and who is intelligent just by reading their email, one sentence, and I know. So if you're a street smart trader, you will think about it, about this service also. New service just started. It's about asset protection, legal protection, identity protection, and how you can benefit this service. And there is a one word, two words, zero cost. So how you can avail this service at zero cost. So if you're interested in finding out how you can avail this service at zero cost to you, send email and just tell me interested in protection. And it's no brainer to smart traders. Again, you have to be street smart, and that's it. So are you a smart trader? If you are, and your action item. So there are two action items for you. Sign up for market trend service at $27, unless you have a way of some other service you have and you rely on them, is good for you. Or you do it your own and you spend time all day long. So you can do that, or you can avail our service. Is $27 per month, less than $1, and you get every day, you get the report, and then intraday also you get the update. And if you're interested in that additional service I just mentioned to you, you can send us the email and we will discuss further. All right. So we discussed many points, and I hope you learned something. And the next webinar will be somewhere in the middle of February. So in the middle of the February, I'll conduct another topic for you. All right. So thank you very much for coming. All right. Bye.